Sam Rines, thanks for joining us. Inflation print just came out this morning. You're one of the folks I know who focuses on this economic information like a hawk, but you've been surprisingly bullish all year long. Does today's CPI print change anything for you?
No, it really doesn't. And I kind of love that it's getting so much attention because it's really the only CPI print in a long time that really hasn't mattered. We already knew what the Fed was going to do. It was a 90+% chance the Fed was going to do nothing in September. It's going to do nothing in September, and it's going to have a lot more data by the time it has its October-November meeting. So it's the first time in a long time that you've kind of been able to look at the CPI print, go, yeah, that was in line, and just move on.
And that's kind of what the market did, right? And we didn't see a giant reaction really in any of the core markets. There was definitely a reaction on Twitter. Let me pop up this quick chart. This is going around today. This is from our friend Jeremy Schwartz at Wisdom Tree. A couple of other folks have different versions of this, really trying to point out that, hey, this big explosion we saw in shelter numbers, which is part of why this number was a little hotter than people expected, is looking at the wrong shelter numbers because real rents have been coming down. What are your thoughts on these arguments about alternative data sets when we're looking at inflation?
So I do think that they're interesting for a couple of reasons. One, if the Fed looked at it, they would, we would be having a completely different conversation right now. We'd be having the conversation of the Fed was right on time. They would have tightened earlier because the inflation that they would have seen using that alternative data would have been ticking up, and it would have been ticking up much faster than what the actual underlying CPI data did. So I would say it's kind of a two-sided coin, right? You can say that the Fed seems to be a little ahead of the curve in terms of killing inflation, but you can also say the Fed wouldn't have been behind if it was looking at this data in the first place. So it's kind of this weird, call it minutia, that I think you can get into. But at the end of the day, what really matters is what the Fed looks at, and that's core services X shelter, right? That's what they're really concerned about. And when it comes to that, it's pretty problematic, right? You're not seeing the type of deceleration that you would want, right? You are beginning to see shelter come down in the data, right? Shelter's holding up pretty well, but you're beginning to see it come down. But you're not really seeing the services side of things really decelerate. And that's really what the Fed wants to see. So as we go into the back half of the year, if we don't, you're probably going to see October, November, and that December meeting come back into play. And plus, we're going to get more dots in September. Those dots, who cares about 2023? Those are pretty much set in stone. Maybe we get a hike, maybe we don't. There might be some debate about that. But the 2024 dots are really underrated in terms of their importance here. Right, you're going to begin to see those really tighten up and begin to see some sort of consensus begin to emerge about 24 that could become a little problematic in terms of, for the markets, in terms of how high the Fed anticipates staying and for how long.
Got it. So the higher for longer, we're not really going to hear about until the fourth quarter when we'll have more information. One last question I got to ask you. I think it's the 7th revision downward on some of the employment numbers we got in the last day or two. Any concerns there? I know you've been pretty bullish on the labor market. This has been a pretty steady set of revisions down, still not looking awful. What's your take?
Yeah, my take is whatever. We had a bunch of revisions down and we're still sub 4% unemployment with participation finally ticking up. If you look at the reason that you had an uptick in unemployment in the latest report, it wasn't that hiring was bad. It wasn't that the labor market deteriorated. It was that a lot of people came back. That's a good thing, right? You're beginning to see those higher wages really pull people back in. And that's important, particularly for a labor market that needs more bodies. Right.
So it's kind of what we want to see happen, right?
Exactly.
Higher prices, it's more supply.
It was the best increase in unemployment you could ask for. And, it sounds ridiculous, but when you have unemployment go up because more people join the labor force, that isn't a bad thing, really. So I would say the labor market still looks pretty steady. And, Cracker Barrel had their earnings this morning, horrible in terms of, kind of the headline numbers, blah, blah, blah. But one of the things they guided to was 4 to 5% wage inflation for the next quarter, right? And so that's indicative of a market where a labor market where you're still seeing wage growth, you're still seeing, a little bit of pressure from labor for higher wages et cetera, et cetera. And you're probably going to hear more about it as the UAW goes against the automakers. And, it's going to be a pretty interesting next 12 months when it comes to this battle between, are we going to have enough bodies back in the labor force, and are we going to have enough wage pressure and to pull more people in order to kind of get the labor market normalized? So no, I'm not concerned about the labor market yet. I think what you really want to see is a significant amount of people come back and a little bit of that wage moderation, right? The more people that come back, probably better for wage moderation. And then you can really have a reacceleration in terms of corporate earnings, which is going to be really intriguing. It's going to be kind of an interesting.
Got it. So it's one of those good news is good news for now, but could be bad news later. Like it. All right. Thanks, Sam. Thanks for joining us.
Hey, thank you.